morning. My name is Rob Furman, Senior Analyst at Catoosa Research. I'm here with Chairman, President, and CEO of Blackbird Energy, Garth Braun. Garth, welcome to the show.
Nice to see you again, Rob.
So Blackbird Energy is one of the few oil stocks at the VRIC, and at least from what I look at, the hottest energy stock on the TSXV. Garth, what are you doing?
Well, I think, what a great question. Well, I think what we've done is that we've been fortunate to put, first off, good rock in place, which is we got a large Montney position. Today we have 91 sections in the liquid-rich Pipestone corridor. I think that's number one, what has happened. I think we've had industry leaders in Canada, Apache, Shell, 7th Gen, all continue to delineate and value up. Interesting thing, Rob, when I first put this package together, I was sharing with some of the investors at this conference, there were 20 Montney wells.
Yeah.
Today there's 264 horizontal Montney wells here, another 51 licenses, and we've got about 12 wells that are going to be drilled by industry leaders right around our land. Number one, we've delineated the two zones in the upper Montney, we delineated the middle Montney. We're now finishing off the drilling of our 6th well, and what we've done is we've gone from an explorer with no production and looks like stranded. This last quarter, we actually completed our infrastructure. We're going to turn that on this week, and
That's
we're
exciting.
a producer.
So the Montney is the most prolific field in Canada right now. I mean, it's right up there with the Permian Basin in the US. It's at least as economic as the Bakken. Why is that?
Well, it's interesting. I actually was asked by a New York large fund that is invested in Blackbird, do an analysis of the Montney and the Permian. And in my presentation, that's actually on our website, we do an analysis. Scotiabank actually did the analysis, and we did a correlation of internal rate of returns, estimated ultimate recovery, payback, and value.
Right.
And it was interesting to see that the Montney, in comparison to the Permian, is actually more profitable. It actually pays back sooner. And yet, we're actually trading at about a quarter to a third of what the Permian is. And I think over time, with equalization of capital coming into both formations, it's going to drive to be an equal basis. Interesting enough, the Permian trades up to 50,000 US an acre.
That's unbelievable.
Blackbird right now is at about 4,500 an acre.
Canadian.
Canadian.
That's a huge difference.
Massive difference. And interesting enough, the Montney is the formation. But what's unique is, some people say it's all homogeneous. The liquid-rich corridor is only about 18, 24 miles wide.
Right.
And that's the tight corridor.
Yeah.
That's the special place, and that's where Blackbird is in the Pipestone area.
And there's some big players nearby, right?
Well, we've got Apache. Wow. They're actually driving infrastructure to the area. They've just announced the Apache Kiera system, 300 million a day sour processing. So they're just to the south of us. Just to the southeast of us is Shell.
Right.
They've actually just licensed 21 more wells.
That's
then we've got
substantial.
to the west of us in Canada, a true industry leader. They've done some amazing innovation in how they produce their wells back. They actually created the model of flow the wells back slowly to recover the maximum amount of condensate.
Right.
To the south of us, Sinopac, CNRL. So we've got great neighbors, and the beautiful thing is, these industry leaders are driving basically the analysis of multiple levels and how we should complete these wells.
Right.
So it's exceptional.
That is exceptional. And you talk about completions. I know there's a second side to Blackbird and a strategic investment you've made on the completions end. Can you talk a little bit about that for us?
Well, Rob, great intro for stage completion. I talked before we started the interview, what company out there on an E&P side has a completions technology that sits within it as an ownership piece? There is no other company.
No.
Blackbird, and I'll say Sean Campbell, my director, who I just love and respect, developed this technology. I funded it. And over the last 3 years, we developed a completions technology that has reduced our costs by 50% per well bore, increased our intensity on tonnage by over 100%, probably 300%. And we just finished our last well, the 3 of 28, and we completed that well in 3 days and did double the tonnage on any previous well.
That's substantial.
That
and
is
you're saving
very
costs.
significant, massive. We're saving over 50%. So therefore, in a 2-year period, we've reduced our drilling and completions costs by more than 50%.
So what did a well cost a couple years ago, and what does it cost today?
Well cost over $10 million to drill and complete over 2 years ago, and we probably had a 50% the volume of proppant into it. Today, we're coming in at around 5.5 million for a 2,000 meter horizontal.
Right.
And we're now pumping in almost double the tonnage. And we're one of the industry leaders in regards to it. And if you talk with McDaniel's engineers, who we're talking to in regards to volumetrics and analysis of the reserves in place on our lands, they say length of well, intervals between, and proppant are all critical components. Stage allows us to do greater number of intervals and greater proppant. This is a massive competitive advantage, and Blackbird has preferential treatment and owns 10% of this company.
That's very exciting. And so then once it comes out of the wellhead, it's got to go somewhere. And so let's talk a little bit about how your natural gas, because you don't sell it at AECO prices, you sell it to Chicago. Let's talk a little bit how you managed to do that.
Well, one of the things and I'm going to give Pat Carlson at 7Gen a major kudo. Pat actually led the industry in looking at large takeaway agreements. He went to Alliance and basically committed to take away 500 million feet a day. I talked to Pat and had a coffee, and he said, get in Alliance because Chicago City Gate, we think, is a real good market to sell into. We were fortunate to lock down takeaway. This is just an initial contract with Alliance. So we've got 5 million committed firm. We can sell into Chicago. Friday this week, I think Chicago City Gate was trading at about 358.
And what does AECO trade at?
I think it was probably $1 less.
Wow, so that's...
And that was Canadian to US.
Margin. Right.
So it's substantial benefit. And it varies, it can be that it changes by substantial amounts, but here's the thing that we felt was, number one, we could hedge into the Chicago market. We see it as a premium market, and Alliance is a great group that we can count on them taking our gas out. So this is a big benefit. The other thing is this, we kind of jumped over it, but we just built a facility. Actually, the majority of it's built to 20 million a day capacity. This facility, if it had been constructed 2 years ago or 3 years ago, would have cost us $40 to $50 million. We just brought this facility on for 16.1 million, all in cost.
That's substantial. And we haven't even talked about the condensate that comes out of the well as well, which Canada is in desperate need of. We actually import condensate from the US to send up to the heavy oil producers so they can send the oil right back.
Well, this is economics 101. Anybody that went and studied economics, you'd look at it, supply-demand theory. Right now, the demand in Canada for 2017 is 500,000 barrels of condensate. And today, Canada is able to produce 175,000. So therefore, we are offside by 325,000 barrels a day.
Amazing.
That production has to come from somewhere.
Of course.
It actually comes from the Eagle Ford.
Yes.
By the way, Stage just sold a 122 sleeve system to a company that's completing a well in the Eagle Ford.
That's very exciting.
So the Eagle Ford's getting more drilling because they know they could sell their condensate up to Canada.
Yeah.
That condensate we sell at a premium to WTI, up to sometimes 22%.
Wow.
This is the one product in Canada on an oil and gas side that we have competitive advantage over all other products in the United States.
Very exciting. Garth, I can't wait to follow the news flow over the next year. It's going to be fantastic.
You bet, Rob. It's a real pleasure. Thank you so much.
Thanks,
and thank you for Katusha Research.